Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another income pick. Many real estate investment trusts, or REITs for short, have faced some serious headwinds since the health crisis of 2020. Quarantine orders meant some businesses temporarily or permanently shuttered their door, which made it difficult for some REITs to pay their bills. Rising interest rates are great for raising rents, but it also means borrowing costs are high. The one great REIT that wasn't faced by either of these issues is Postal Realty Trust Inc., traded on New York Stock Exchange under symbol PSTL. John?
Yeah, thanks, Mo. Yeah, most people aren't familiar with Postal Realty Trust, but that might be because it only went public back in May 2019. And when it comes to REITs, most people are familiar with residential, mortgage, and office REITs, but the REIT universe is much more interesting than just that.
Yes, especially REITs don't fit neatly into typical REIT box. They generate income from specialized real estate like billboards, fruit farms, cell towers, casinos, etc. Post Realty Trust is even more specialized. It's a first and only publicly traded REIT focused on properties leased to the United States Postal Service, or, our viewer would know it as USPS. John?
Yeah, Postal Realty's property portfolio is comprised of, I think, 1,434 properties across 49 states and one territory, with approximately 5.7 million net leasable interior square feet. And that's a lot of space. That's equal to like 99 NFL football fields. Now, while Postal Realty's property portfolio is large and growing, it only represents about 6% of the leased market. The market is highly fragmented with nearly 17,000 different lessors of property leased to the USPS. The next 20 largest portfolios combined only own 11% of the market. Now, to put that in perspective, 92 million square feet are privately owned, while 5.7 million square feet are owned by Postal Realty Trust. What that means is there's plenty for room to grow. Postal Realty has a market cap of 305 million. And it's the highly fragmented market of the critical logistics assets is estimated to be around 15 billion in size.
And now you might think that postal industry is waning, and on some level, it is fewer people are sending postcards. But USPS has an irreplaceable logistic network that everyone from Amazon, UPS, FedEx, and DHL tap in every day.
Yeah, exactly. And as e-commerce grows, USPS's shipping and packaging services have become even more vital to last mile deliveries. Moreover, with 31,000 plus facilities, the USPS is the largest retail distribution network in the US. It would also be virtually impossible to replicate, which makes it a high barrier entry to any competitors. Now, the USPS is also one of the most reliable tenants on the planet. After all, if you can't trust the USPS to pay rent, who can you trust? For starters, it's supported by the federal government. Second, USPS is operating lease payments represent only 1.7% of USPS's total annual operating expenses. This is helped the company weather unexpected economic downturns. Case in point, the USPS has been able to keep up with 100% of its rent payments during the depths of the 2020 health crisis. Postal Realty Trust collected 100% of rent and maintained 100% occupancy. It also acquired 261 postal properties for roughly 130 million. Now in 2021, it collected 100% of its rent again and acquired 239 properties for 118 million. Fast forward to 2022, it again collected 100% of its rent, and it acquired 320 USPS properties for 123 million. Now, by all accounts, 2023 is shaping out to be another great year for Postal Realty Trust Inc.
This company recently delivered another successful quarter.
Yeah, absolutely. For the third quarter of 2023, ended September 30th, Postal Realty announced that revenue increased 17% year over year to 16 million. That income climbed 25% to 1.1 million or 4 cents per share. Funds from operation was 6.3 million or 25 cents per share, while adjusted funds from operation was 6.9 million or 27 cents per share. During the quarter, the company acquired 70 additional USPS properties for around 24 million. This brings it closer to reaching its 2023 acquisition target of 80 million.
And its quarterly distribution has increased 276% since 2019.
Yeah. Now, as a REIT, Postal Realty is legally required to distribute at least 90% of its taxable income to investors. As a result, it is known for its attractive return profile. It has increased its dividend actually every year since its IPO. Most impressively, perhaps, it actually raised its dividend for 15 consecutive quarters from 0.0630 per share in July 2019 to 0.2375 per share in February 2023. It's held that distribution there since then. This works out to an annual distribution of 95 cents per share for a current yield of 6.75%, and that's more than twice the current inflation rate of 3.2%. The dividend payout is safe too. It's easily covered by a third quarter adjusted funds from operation of 27 cents per share.
The undervalued PSTL stock has double-digit upside.
Yeah, despite reporting solid financial results and some other things, it has 100% rec collections, accretive acquisitions, a growing liquidity position. Postal Realty stock has actually been held down by broader sentiment about the REIT industry. Now, technically, REITs are one investment that generally should perform well during inflationary periods, and in particular, Postal Realty. Of its outstanding debt, 100% is fixed rate. There are no notable maturities until 2027. 92% of its assets are unencumbered by secured debt. The weighted average interest rate is 4.04%, and weighted average term of debt is 4.5 years. Despite these, great tailwinds, Postal Realty stock is up 4.45% over the last month, only 3.8% year to date, and actually down 3.5% year over year. But the outlook for PSTL stock looks much better, with Wall Street analysts providing a 12-month median share price target of 16 per share and high estimate of $17 per share.
John, thank you so much. There's a lot to like about Postal Realty Trust. It is the only publicly traded REIT focused on properties leased to the USPS and is singularly positioned to consolidate the large, highly fragmented market. The critical logistic infrastructure helps support not just the USPS, but also e-commerce and last mile delivery. The USPS also has a strong federal government support, which helps explain why during the worst economic crisis of the last 100 years, it was able to collect 100% of its rent. Postal Realty continues to be in a strong financial position with plenty of available liquidity to continue to expand its portfolio too. This, of course, should further help support its reliable, stable, growing ultra-high yield dividend. That's it for today. And make sure to go to incomeinvestors.com now to get our free special reports on our top 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.